Welcome back to another episode of Coffee and Stocks. In today's video, we are going to talk about one new EV stock that is coming via SPAC. But before we get started, how about we get some coffee? Alright, so please can I ask you to drop a like on this video as well as press that amazing subscribe button. It does go a long way in supporting the channel, and I do thank all the 609 subscribers that I do have right now. So don't forget to drop a like and press that amazing subscribe button. So let's go ahead and get started. Which company is coming? It's called Nuvi Corp, right? Look at this pretty cool logo right here. So Nuvi Corp is an EV company, and it's coming via SPAC with Newborn Acquisition Corp with the ticker symbol NBAC. Currently going for $22.27. Yes, it exploded from the last couple days. It was at $15 before market open, and it increased 48%. Yesterday, Tuesday, opened up at around $12.05. So right now, it is currently up with more than 84%, which I think is a lot of hype. But let's go ahead and get started, dig in more into what this company is, etc., etc. Headquarters are in China, so do think and do have this into your perspective that China is the biggest EV market country out there right now. So let's go ahead and look into this vehicle to grid technology. That's what they are aiming for. Renewable energy source need storage, right? So electric vehicles, EVs, have a built-in energy storage system. Vehicles to grid, which is V2G technology, bridges to gap between these two sectors and help regulate energy on the grid. And I don't want to make this video too long, so I'm gonna rush a little bit into this. And this is how V2G works. First, you plug in your car, then you charge your battery safely and efficiently in V2G mode. Then you make money by providing power capacity and sending energy back and forth to regulate the grid, or save costs by using stored energy from EV batteries to reduce building energy peak consumptions. Then 4, you're ready to drive. With the charge, you set the day with advanced trip planning using mobile fleet management app. So this Nuvi is not really making any cars or anything motorized in that fact. It's the way you charge. So they're kind of using your car to store energy and to kind of level the energy that is on the grid itself. So let's go ahead and look into the investor, right? So who is Nuvi? Nuvi is a proprietary vehicle to grid technology. Enables linking of multiple electric vehicle batteries through EV charging stations into a virtual power plant, which is VPP, providing bi-directional services to the electrical grid in a qualified and secure manner. The company generates revenue from binding onto energy markets and creates energy savings for its customers. Who doesn't like savings, right? Nuvi's technology and ecosystem has proven to successfully lower the cost of electric vehicle ownership while supporting the integration of renewable energy for a scalable and sustainable green society. And I will attach this link down below if you guys want to read more on this. What is their mission? Their mission is to lower the cost of electric vehicle ownership while supporting the integration of renewable energy for scalable and sustainable green society. So power generators, transmission system, distribution system, and customers. So this is pretty important, right? So wind and PV share global capacity. From 2018, it was 15%, and then in 2040, they're trying to reach 52%. So EV share new global scales. 2018 was 2%, and by 2040, just around the same time, they are going or trying to get to 57%. The EV market forecast for all these types of sizes of EV vehicles in the US. Years of expected price is supposed to increase in the US, in Europe as well, and in China it's gonna increase as well, but they're trying to get the cost of it down with their charging stations, etc., etc. Nuvi's platform and services: electrical vehicles go from being unreliable resources into reliable, dispatchable, and monetizable assets. Helps stabilize the grid with Nuvi's bidirectional charging, enables increased and renewable penetration, reduces the cost of EV ownership, and encourages EV adoptions, which is really good because a lot more countries and a lot more people are looking to be environmental friendly, and EV can make that possible. Guarantees vehicles will be set for use by owner when needed, and optimizes and protects the vehicle battery. So as you can see right here, you have more charging stations in Spain, Delaware, California, Denmark. They have quite a bit of these V2G charging stations. So all this is it's pretty easy to understand, and it's pretty easy for everyone to look into it. Now I do want to jump into, like right here, Nuvi comparison to competition today. Transportation, yeah, everyone uses it except OVO Energy. Behind the meter, demand charge, and TOU, and the grid. Nuvi is set to check mark all of these, which is pretty cool. Nuvi has 10 years of experience of market participation and stakeholder interaction, including with car OEMs. They have tons and tons of data collection that they've gotten, which is pretty cool. But what I do want to go a little bit more into is the financial summary. They don't have any or major, say for example right here, publicly listed special purpose acquisition company with $57.5 million in cash in trust, which is pretty tiny compared to what a lot of other SPACs have been coming out and being purchased for. Nuvi pre-money equity valued of $102 million. Consideration of Nuvi paid with 10.2 million shares. Right here, transaction includes $14 million common stock and warrant PIPE at $10 a share. For every PIPE share purchase, PIPE investors receive 1.9 warrants. Each whole warrant exercisable for half a common share. It's also interesting to read down here. So, Nuvi comparable company benchmarking. Nuvi's 2020 to 2022 revenue CAGR of 312%, significantly higher than comparables. Nuvi's pro formula valuation is a significant discount to the two primary comparables, Blink and ChargePoint. Yes, I guess, but you're only comparing yourself to Blink and ChargePoint. Why aren't you comparing yourself to those big companies like Tesla's charging, that they have already a big sustainable source? I don't know. Maybe you're just comparing yourself to something that you could easily, have in the target or around the same area, which is interesting, right? So historical and projected PL, operation income loss was at 2,915 in 2017. Year to date is 2,449. Projection in 2020 or 2022 is at 25,400. That's a huge increase from these 2 years. So I don't know about that. I might have to see a little bit more numbers if I'm gonna invest in this company. Now, with that being said, I think $22.27, it's a little too high right now. It's way too hyped for my liking. It increased 86%. Yes, it might see a little bit of correction. It is gonna be in my watch list. I'm not gonna invest in it quite yet. I want to see a little bit more of what it does and a little bit more of information on how it works and stuff like that. I will leave a link down below if you guys want to read a little bit more in this investor presentation. But that was today's video. Hopefully you guys liked it. Don't forget to drop a like on this video, as well as press that amazing subscribe button, because honestly, it goes a long way in supporting the channel, makes me happy, and I like to make you guys happy and give you guys more information. But until then, I will see you guys next time on Coffee and Stocks.